Good morning, guys. Tiffin చేయలేదరా? Okay, then fine. Myself, DQ Nawin. I'm your financial management faculty. So few people already know I teach costing also. Okay. Now in group 2 I will teach financial management and management accounting, both the purpose I will deal. Okay. I know few people name. I need to know remaining people's also. What's your name? Likitha. What about you? Ishwar. Okay. Yashwant, not Ishwar. Okay. Wait a moment. Let us check online students also. So good morning, guys. Please respond on YouTube chat. I hope you already completed group 1 exams. Written well, huh? Okay. Surya, good morning. So okay. Without late, I will start our FM paper. Paper 11. Financial management and business data analytics. So here FM occupies 80% of weightage and business data analytics occupies 20% of weightage in your paper. When it come to this 80%, I will deal by DQ, sir. So this 20% deal by CA Maninder, sir. So that's why I'm not talk about this data analytics. I only talk about FM. Now when it come to this 80% of question paper carries 80% of problematic portion, 20% of theory portion. So you can proudly say it is a paper of problematic, not theory. Because question number 2A, 2B theory, 8A, 8B theory, remaining all are problematics. When it come to MCQs also, you will get a 7 or 6 MCQs from theory. Remaining all situations, the paper is problematic paper only. Okay. Now, Hema Chandra, for June 2026 group 1 coaching will start at. So we will provide video for that group 1 classes. First, when it come to the exam trends, apart from June 23, first attempt of new syllabus, remaining all attempts they followed similar pattern only. Question number 2A, theory question from FM. 2 chapters is there relating to theory. Introduction to financial management, instruments and institutions of financial management. From that 2 chapters only you will get one theory question, question number 2A. Next, when it comes to question number 2B, this question came from business data analytics. Next, question number 3A. This direct question came from the chapter name called ratio analysis. Question number 3B. Here we can't say direct chapter name. Why? Because there is a chance of two chapters is there. One attempt they will give cash flow statement, another attempt they will give funds flow statement. So for question number 3B, cash flow statement or funds flow statement. This also be a problematic portion only. Question number 4A, the direct question, the chapter name called cost of capital. One of the easiest question we have. Question number 4B, sorry, this 4A also the chapter name called ratio analysis. Question number 4B from cost of capital. Question number 5A and 5B from capital budgeting. Question number 6A and 6B from working capital management. Question number 7A and 7B. For this question number 7 and 7B, there is no fixed area. You have to refer 3 chapters. The chapters names are capital structure, leverages, and dividend decision. They follow different alternatives. Some attempt they will ask 7A capital structure, 7B dividend decision. Some attempt they ask 7A leverage, 7B capital structure. That kind of combo they will follow. The next question number 8A and 8B. Direct theory questions from business data analytics. So this is the exam paper trend. So student need and must and should, they need to understand this first. If they know this clarity about the exam paper, then they can easily handle and they will give a importance for which chapter is important for exam, which one is not important, which one is medium, which one is not required. That kind of decision student can take. So for example, if I start capital budgeting chapter, if you take a leave of 1 or 2 days, it will reflect remaining all chapters. So when you come to the FM point of view, don't take any leaves. Why? Because each and every chapter is interlinked to another chapter. So for example, the cost of capital, capital structure, leverage is one set of chapters. For that chapters, the continuity is not that much of important. But when it comes to capital budgeting, working capital management, continuity is very, very important. Why? Because the 2 chapters carrying 14 plus 14, 28 marks. Guys, clear? As well, you have to keep one point in your mind. The point is, out of 12 questions, 2 questions given by choice given by ICMA. Remaining 10 questions is there. Out of 10 questions, you must and should and you need to answer 6 questions exactly, without mistakes. 6 7s are 6 7s are plus MCQ, so 20 marks. Just if you answer 10 MCQs correctly, what is the marks you get? Exemption. Guys, clear? So then please tell me that 6 questions are 6 question related chapters. That is sufficient now. No ma, if you practice all chapters, sometimes easy chapter questions are also difficult. That's why you need to learn all chapter questions. Out of that all chapter questions, at the time of writing exam, you have to pick this is the easy question. So if you prepare only 6 chapters for 6 questions, if they ask difficult question out of 6, what happen? 5 questions only you can answer. Guys, clear? That's why you have to learn all chapters thoroughly. All chapters thoroughly. Sir, they will play mind game in exam, sir. If it is a difficult question for you, For the same question is difficult for all of us, including me. They will ask that question only. If it is easy to all, I can't ask as an examiner. Why? Because everyone will answer, no? That's why our pass percentage is very low. Clear? So okay, then fine. So do you understand the past paper trends? These are the 6 attempts trend ma. Except 5 attempts. Why? Because June 23 is not, there is no proper trend for final as well as inter. Okay, then fine. Financial management. Can anyone tell me the meaning or definition of financial management in your simple words? Why? Because we don't know, but we are using this financial management in everywhere. In our home also we are using financial management. In this college also we are using financial management. In everywhere we are using concept of financial management. So there is a few subjects like accounting, costing, that will give just a job knowledge. That will give only job knowledge. But when come to the financial management, it will give business creation knowledge. It is not a subject, it is a livelihood of every businessman. Clear? Don't learn for 40 marks or 60 marks. Learn for business mindset point of view, then you can easily understand FM. So if you think only for 40 or 60 marks, it's not possible to survive in future. Clear na? So just to focus on the subject of FM, it's like a we can't express the words to financial management ma. That much of beauty it is. Okay, then fine. Tell me ma, what about the understandable thing you learned about the financial management in your surroundings? Or you can say definition based on word also ma. Management means what ma? Managing things only na. Managing things only. What about the finance ma? What about the finance? The word finance dictionary meaning money ma. Managing money is known as financial management. That's simple definition. We have multiple definitions with paragraphs, but the basic understanding of financial management is nothing but managing money. In your home also, your mother or father doing that thing only, no? That is called financial management. So for example, the few students, they have knowledge of managing money skills. So the parents give 10,000 rupees of pocket money. Out of the 10,000, they use for some amount for rent. That is nothing but hostel fee. So 2,000 for the daily expenditure. That all kind of things is known as financial management. Here we are just talking about 10,000 rupees. When it comes to the company's point of view, they talks about 10,000 crore rupees, 100 crore rupees. The volume of currency will change. The definition will not change in anywhere or everywhere. Guys, clear? Then fine. So what's the financial management? Managing money is known as financial management. This is not a book definition. This is a definition for understanding purpose. Why I am not saying book definition means first day only if you talk about that kind of paragraphs. So I think you will choose PDA. Guys, clear? So then come. When you wanna manage, you have to understand objectives of financial management. If you don't have an object, the managing is not possible. For example of 10,000 of planning, what is the objective? We have to save some amount. That is the objective. If you don't have that objective, you will expend that amount also. Guys, yes or no? Na? Now the same thing here, financial management had a two objectives ma. Profit maximization, wealth maximization. 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 Wealth maximiz Now, can anyone tell me the difference between profit maximization and wealth maximization? Or are you feel both are same? I want valid reason for both. If you feel both are same, tell me why they both are same. If you felt the both are different, then tell me the reason why they both are different. The common sense I will apply in everywhere, sir. Sir, if they both are same means, they will not give two names. They will give one name only. If they are giving two names means, there is a huge difference or a slight difference. The mandatory there is a difference is there. If there is no difference means there is no two words. If there is a two words means there is a chance of slight difference or huge difference. When it comes to the profit maximization, wealth maximization is not a slight difference. There are huge difference is there. Okay, take an example to understand. Okay, I taken a amount of 10,000 rupees from Raghavendra, right? Ramesh. Okay, every week I will pay 100 rupees as a interest. Are you guys clear? 100 rupees as a interest. Now that 100 rupees interest is there, na? That is a cost or expenditure to me. Why? Because I am paying extra 100 rupees every week. For Ramesh point of view, return or a profit. So the point you have to understand, by using that 10,000 rupees, he generating every week how much? 100 rupees or 1,000 rupees, whatever it may be, 1,000 rupees. That is called profit maximization. If I invest 10,000, if I receive part of the, not part means 50% or 60%, minimal or a nominal amount. That is a bank rates we are using. So when you are taking a interest, first they will check market. Market is nothing but bank rates. So bank how much they charging? Minimum I want that. Yes or no? No. So that is a minimal amount I am receiving, Ramesh. I am receiving from that 10,000 rupees. That is called profit maximization. That is called what, ma? Profit maximization. Now for that extension, for every week he receiving 100 rupees, na? For 10 or 20 weeks he accumulated. Again he reinvested in another person point of view. You giving loan of remaining amount to the another person. That is called wealth creation. That is called wealth creation. Now how much of amount in the hands of Ramesh means 10,000 my loan. The 20 days accumulated fund is there, na? 20 weeks into 1,000, 20,000. That also be asset only. Clear? The difference you have to understand. Profit maximization means if I invest something, I receive nominal or minimal amount on that. That is called profit maximization. If I invest something, if doubles that amount, the 10,000 doubles to 20,000, that is called wealth maximization. Guys, clear? Yes or no, ma? So if I have 1,000 rupees, if I invested, I receive 10 rupees. That is called profit maximization. If I invest 1,000 rupees, I receive 2,000. That is called wealth creation. You can also use the word called capital maximization. Your capital increases, na? That is called wealth maximization. Now this is a layman point of view, ma. When it comes to organization or business point of view, they deal with shares. They deal with shares. If my company name is DQ Limited, I want money. I sell my document as a equity share. I will sell one document. The document name is equity share. Purchase you, please give me money. Are you okay? Now that is called equity shares. That's a discussion you can understand in corporate accounts also. Okay. Now what I did means, recently Zomato came into the IPO, initial public offer. Okay. I purchased one share for 2,080 rupees. For 2,080 rupees. For every 3 months, they will pay 20 rupees as a dividend. 20 rupees as a dividend. Now that 20 rupees is known as what, ma? Profit maximization or wealth maximization? Profit maximization. After 1 year, I have a right to sell that share to another person. How much the price I incurred, ma? 2,080 rupees, ma. I sold for 4,000. I sold for 4,000. 4,000 minus 2,080, how much, ma? Some X amount. That is called what, ma? Wealth maximization. Hope you understand? Now, profit maximization is not our thing. In entire organization point of view or individual point of view, we have to focus on what, ma? Wealth maximization. Now tell me you only. Profit is important, wealth is important. Wealth is important. Now, as a financial analyst in a company, are you focused on profit maximization or wealth maximization? No, both. You have to focus on both, but you have to give more importance to wealth maximization. Are you guys clear? So, profit maximization is a outdated concept. Wealth maximization is a modern concept. Clear? Once upon a time, companies only focusing on profits only, not on wealth creation. Now the MNC style and MNC culture happens. A large group of industries are created. The concept of wealth maximization came. Why? Because I trusted your company. That's why I invested 2080 rupees on your company. You have to continue the trust. How it continue means not by words, by money creation. That money creation is nothing but wealth maximization. Are you clear now? Okay. Take another example, the share price is how much, 2080 rupees. Okay. After 1 year, the share price is 1080, After 1 year, the share price is 1080. If you sold that share to another party, are you get more money or less money, Poor financial management in the company. Poor financial management in the company. Why? Because as an investor, I don't want that 10 rupees, 20 rupees of dividend. What I want? Capital increment. I want my share price need to be double, triple, into 4 times. That kind of thing I need. When it happens, if financial analysts take a best decisions relating to wealth creation, so then company has a good in wealth maximization, automatically share price what happen? Increases. Investor will happy. Because the reason, not because of profit, because of wealth. Are you okay now? Do you understand now the difference between profit maximization and wealth maximization? Both are important or not important? Both are important. They will ask MCQ. Primary objective of organization. Answer? A. Profit maximization. B. Wealth maximization. C. Both. D. None of the above. C. Both A and B is the wrong answer. Primary objective. Primary means important one. What is the primary here? Wealth maximization. I pin 2 marks. You know the concept, but you don't have a judgment. You have to understand not the word of objective. You have to understand the before word called primary. Clear? If they ask what are the objectives of financial management, now the answer both A and B is the right answer. Clear now? Okay, then fine. So Ramesh is my financial analyst or financial manager of my DQ Limited. Are you okay? So as a company owner, I am not responsible for all activities in the company. Why? Because I have 5 companies. I can't take all decisions. That's why I recruited this CMACS for different role. Now for this DQ Limited, he was the CEO as well as financial analyst. He need to take a decision relating to wealth maximization of my company. So they need to report only sufficient for, he need to report, that's it. Remaining all decisions he need to responsible. Are you okay? So if Ramesh want to create wealth to my company, he need to take a 3 best decisions. If the 3 best decisions are, if 3 decisions are best, automatically wealth maximization will be happen. Now okay, then fine. So if you wanna maximize wealth, financial manager need to take 3 decisions. Financial decision, investment decision, dividend decision. If 3 definitions are best, automatically wealth will be created. The objective fulfilled. Clear now? So tell me, Ramesh Ramesh is not a financial manager now. He has a own thought to start a business. Now what are the consequences if you want to create a business? How you start? Are you invest money first or you procure money first? Procure money. Capital. First, he need to procure capital. After procuring capital, what he need to do? He need to use that money. The usage is nothing but investment. Collection of money is known as finance decision. Usage of money is known as, so that are the layman language when it comes to the professional. Procurement of funds. Procurement of funds is known as financial decision. Utilization of funds is known as investment decision. If these two decisions are best, then only there is a discussion of dividend decision. Out of these two, anyone is mismatched, anyone is wrong decision, there is no concept of a dividend decision. Why? The reason, when it comes to financial decision, we will think only where we need to collect money, how much interest I need to pay. These are the things we need to learn under financial decision. Now tell me, when you are procuring money from other sources, like different sources, are you planned for pay more cost or less cost? Are you ready to pay more interest or less interest? Less interest. It means in financial decision, what you learn, ma? Where I need to procure money at least cost, where I get. Are you okay? For example, I procured 100 rupees, ma. Can I name it? It's called financial decision. I need to pay 10% of interest every year. Percentage means per annum only, unless they specifies. If they specifies, then you consider quarterly or half-yearly. Unless they specifies 10% per annum. Okay, 10 crores, 100 crores procured. Out of 100 crores, every year he need to pay interest. Why? Because no one can give for free of cost. Na? Even siblings also, they will ask interest. Yes or no, sir? So the rate of interest he need to pay how much, ma? 10% per year. Now, if I procured 100 crores for 10% of rate of interest, in my mind only one thing will run. If I use that 100 crores, minimum I need to earn 10%. Minimum how much I want, ma? 10%. Why? Because I need to pay 10% of interest at the end of the year, na? Okay. So that 100 crores I will use for business purpose. Where you use means in two areas you are using. The two areas are long-term assets, short-term assets. Factory needed, plant and machinery needed, building needed. This all is known as long-term investments. Raw material is needed. Raw material is needed. Yes or no? Working capital is needed. That also called short-term investments. That 100 crores I am using for long-term utilization, short-term utilization. If you use like that, what happen? Machinery is there, raw material is there, labor is there. Work will start. Finished good will came out. You will sell in the market. You will get revenue. That is called profit and loss account. Assets related, liability related, balance sheet. Yes or no? No? Now the generation of profit is there, na? After payment of variable cost, fixed cost. The profit you will get is known as EBIT, earning before interest and tax. I will give clarity about all those things. Okay, first you have to pay variable cost. Next you will get contribution. Amount is profit is known as contribution or variable profit. Out of that you have to pay fixed cost relating to the good. Relating to the good. If you pay that fixed cost, you will get some amount. That is called business profit. You can't enjoy that business profit. Why? Because out of that you have to pay something. Okay, now business profit is 12%. Business profit is how much, ma? 12%. Now how much percentage of interest you have to pay? 10%. 10% your point of view, best or worst, ma? At the time of financing, the least fund I procured for 10%. If I procure somewhere, they are asking 12% interest. If I ask in banks, they are saying 14% interest. If I ask some other company, they are asking 16% of interest. Out of all that percentage of interest, which is a minimal, ma? 10%. Now that is the best decision only, na? Now when it comes to using money for investment of long-term assets and short-term asset, I generated a profit of 12%. Out of the 12%, I will pay 10% interest to the investor. 2% is there. Then company need to take a decision. Shall we share the 2% or can I hold the hold for the long term? Now 2% of profit is there, na? You can share to your wants. Option 1. Option 2, you can use the 2% for reinvestment, another business plan. Two options is there, that is called dividend decision. When the dividend decision works means best financing decision, best investment decision, then only the topic of dividend decision. Now the 10% is the best decision financing. But when come to investment is there now, the profit, business profit generated just a 10%. Now what happened? That entire 10% you have to pay to investors. How much profit in your hand? Zero. There is no concept of dividend decision. Clear? Okay, then fine. Now the financing decision 10%. Now the profit I generated with help of investment 8%. What happened now? Company need to pay 2% from their pocket. There is a topic of dividend decision or not? There is no topic. Are you guys clear? Do you understand the three concepts of financial decision, investment decision, dividend decision? Procurement of money is known as financial decision. Utilization of money is known as investment decision. Share of profit is known as a dividend decision. Are you okay? Okay, sir. Sir, you said 10%, 16, 14, 15. Out of that, 10 is the minimal rate of interest. That's why you said it is a best decision. How can I fix best decision? Means based not like the 10%, 16%, you have to learn 3 chapters. With the 3 chapters only, you can get a command over financial decision. You have the 3 chapters knowledge in your brain, then you can take best financial decision. If you don't have out of 3 chapters any 1 chapter knowledge, you can't take best financial decision. Are you okay now? Now, if you want to take best financial decision, you have to learn 3 chapters thoroughly. Cost of capital. Cost of capital. Capital structure. Leverage. These are the 3 chapters knowledge you required, ma. Cost of capital, capital structure, leverage. Now the cost of capital talks about minimal rate of interest. Minimal rate of interest. From starting onwards, I am using a name called interest. Yes or no? No? Interest is one of the point. Why? Because in market we have a multiple sources. For example, I procured money with help of selling my shares. That is called equity share capital. For that equity share capital, I am not paying interest. I am paying dividend. Are you guys clear? Huh? Multiple options is there. Out of that multiple options, we will deal only 5 concepts. Next, equity share related completed. Another document name is called debenture. I sell my company debenture to you. I procured money. For that debenture, I need to pay interest. There is another security name called preference share. If I sell that share to you, I need to pay every year ending. Interest is there now. We are not using a name called interest. That is name called preference dividend. Are you guys clear? Out of that only we will consider which one is the least one. That is a concept set by cost of capital. Next, when come to the capital structure. So overview is not possible at the time of chapter. I will give overview. So this also talks about capitals only. Are you okay now? Now the concept of leverage. The concept talks about risk associated with capital. Are you okay? Are you take risk or not, ma? If you risk, profit is a reward for risk taking. That's why you have to learn the concept of leverage. Are you okay? The leverage says that less effort, more benefit. Less effort, more benefit. That only we want. I need to put less efforts. I need to get good results. That's the concept set by leverage. If you know these 3 chapters, then you can take what decision best, ma? Financing decision. If financing decision is best, can I name it is called good wealth maximization for the company? No. Why? Because it linked to investment decision also. If these 2 are best, then only what created, ma? Wealth is created. Okay, then fine. When it come to investment decision, ma, procurement of funds. Now what about the investment decision, ma? Investment means what? Utilization or usage. Fund same only, na? I procured 100 crores. I used also. That is nothing but assets total, liability total in balance sheet. Clear? Okay, then fine. So where you invest, ma? Where you are investing? First you are investing in land, construction of factory, purchase of plant and machinery, furniture. This all is known as per accounting terminology, long-term assets. For purchasing of, for using money for this 4 is known as long-term investment. Long-term investment. With the help of assets, you can produce, with help of assets, you can start business, What you want? Raw material, labor, variable expenses, fixed expenses. This all you want, na? For incurring money for that is called short-term investment. Are you clear? So study of long-term investment is known as capital budgeting. Study of long-term investment is known as what, ma? Capital budgeting. Study of short-term investment is known as working capital management. Study of short-term investment is known as working capital management. So if you want to know the concept of capital budgeting, here also you have to learn some basic concepts like time value of money. I think in your foundation level, maths, time value of money. Okay, I will cover here. Time value of money. Risk and return. Risk and return. So observe the linkage. If you want to take a good investment decision, you have to learn 2 concepts called long-term investments, short-term investment. The long-term investment related concept given by capital budgeting. The short-term investment related concept given by working capital management. If you want to understand the concept of capital budgeting, you need to learn basic things called time value of money, risk and return. Are you okay? So these are the points you have to understand relating to wealth maximization. How company wealth will maximize. It maximize with the help of 2 best decisions. What are the 2 best decisions? Financing, don't shuffle it. Investment is not first. Finance only first. Financing decision, investment decision. If you take good decisions relating to that 2 concepts, automatically company wealth will be created. The wealth creation is nothing but it relying on dividend decisions. Are you okay? Now what are the points I segregated? That are your chapter names. You can easily understand the chapter names also. This is the list of chapters. Are you okay? For example, for financial decision you need to learn 3 chapters, na? It will complete 50% of your notes. For investment decision and a dividend decision, both another 50% notes will be complete. Now Ramesh had information of 1 notebook. As a owner, I asked, give report for me. If he will give that entire book, can I take a decision? Possible, as a owner it is possible. He need to give in a simple format. You need to give in a simple format. I want entire 2-3 pages in 1 formula. I want entire notes in 3 pages. Guys, clear? Reporting is not a notes. It's a 3 or 4 pages document. Are you guys clear now? For that reporting purpose, you have to learn the chapter name called ratio analysis. The concept of what ma? Ratio analysis. That is your next chapter. Now, in this ratio analysis, two subjects are included ma. Accounting not subject, two concepts. Accounting concepts is there, cash concepts is there. I hope you know the difference. Accounting concept and cash concept. What is the difference ma? Accounting follow accrual concept. Are you guys clear? Cash concept follows only cash related transactions. But in this ratio analysis, both are included. Both are included. The ratio analysis is a simplified format, and that simplified format also two things are included. Received, receivable, paid, payable concepts are there. Cash received and paid concepts is there. Now as a owner, I asked only received and paid ma. Out of the 3 pages, he need to segregate received concepts, paid concepts. That is called cash flow statements. That is a chapter name called what ma? Cash flow statements. He reported that also. Out of that document, he segregated cash related transactions. He reported me. Okay, then fine. I asked another report. I want, we procured 100 crore na. Where were we utilized? Where were we procured? Where were we utilized? I'm just talking about out of 100 crores, where you procured, where you utilized. I want that transactions only. That transactions only called utilization of capital only na. Procurement of capital, utilization of capital. Can I use name is called fund? Yes or no? That statement name is called funds flow statement. Statement is known as what ma? Funds flow statement. And that funds flow, you can use a receivable, received, paid, payable. But when it comes to the cash flow statement, you have to use only received, paid. So capital related statement is known as what ma? Funds flow. So this is the concept as well as your chapter list flow chart. Are you okay now? Now I will tell the list of the chapters first. Introduction to financial management, financial institutions and instruments. These 2 or 3 chapters. Cost of capital, capital structure, leverages, time value of money, risk and return, capital budgeting, working capital management, dividend decision, ratio analysis, cash flow statement, funds flow statement. Clear now? Write it down. Student, at least you need to know what are the chapters in every subject ma. Order is not important. Chapter names are very, very important. At least based on that also we can judge question which concept it is. If you don't know about the chapter name, how you decide which this question came from which area? Are you okay now? Do you want this past tense ma? Write down. Guys, completed? Highlight the chapter names, ma. So reporting purpose, ratio analysis, cash flow statement, funds flow statement. Financing purpose, cost of capital, capital structure, leverages. Investment purpose, capital budgeting, working capital management. So capital budgeting purpose, you have to learn two things: time value of money, risk and return. Easy, no? Yes or no? Okay. Without what, shall I start with the first chapter number 3, cost of capital? Cost of capital in exam point of view. Question number 4B, mandatory question, 7 marks plus 2 marks MCQ. Totally 9 marks will came from this chapter. MCQ also easy MCQ they will ask, ma. Okay. Out of the 6 attempts, not this attempt, before attempt only they asked difficult question in chapter 3. Remaining all attempts they asked basic question only. Okay. So Ramesh provided a loan of rupees 1 lakh to DQ. Close your notes. Understand the example. So here two kind of things we need to learn. Ramesh point of view definition will be different. DQ point of view definition is different. Now the topic you have to learn on DQ point of view. Why? Because procurement decision, na? Not an investment kind of decision. Ramesh point of view there is an investment. DQ point of view procurement. Are you okay? DQ procured 1 lakh rupees as a loan from Ramesh. Are you okay? What's the date today? 22 December. Wait a minute. Yeah. So in this financing decision point of view, always you have to think you are a financial manager for financing, not for investment. That's why you are the financial management of DQ. How much amount you received, ma? 1 lakh rupees you received for free of cost, or you need to pay something? You need to pay something. That is called cost. Your point of view, that is benefit to the giver point of view. Ramesh point of view, what is the amount you pay extra, that is called benefit. Your point of view, that is called cost or expenditure. We are not using a word called expenditure, we are using a name called cost. Are you okay? So today the date is 22 December 2025, right? Next year 22 December 2026 I repaid as 1,40,000 rupees. 1,40,000 rupees. Out of that 1,40,000, 1 lakh is known as capital repayment. 40,000 is known as extra cost I need to pay. Are you okay? Now the cost of capital chapter says that 40,000 rupees. Not about 1 lakh. The cost of capital topic talks about what ma? Extra payment you did for capital procurement. That is called cost of capital. Can I say in percentage point of view? Can I say in percentage point of view? How much amount I am paying ma? 40,000 rupees extra I am paying now. 40, how much I received? 1 lakh. 40,000 divided by 1 lakh into 100 you will get percentage. Huh? How much percentage you paid ma? 40%. Now the 40% is known as cost of capital. Rupees point of view 40,000, percentage point of view 40%. Here we are not discussing about capital repayment. Here we are discussing about extra amount we paid for capital procurement. Are you okay now? Now that is a overview of cost of capital ma. Simple term. But calculation is complicated. The concept is that only. 22nd December 2025. Now 22nd December 2026. I repaid ma. How much I repaid? 1,40,000. Now that 1 lakh is known as what ma? That 1 lakh is known as what? Capital. Now that 40,000 is known as what ma? Yes. Cost or expenditure. That technically known as cost of capital. Cost of capital. Okay. Do you understand the meaning of cost of capital? Yes or no? No? Now, definition for cost of capital. Do calculation part also, you will get clarity. This cost of capital calculated in two ways, na? Rupees point of view, 40,000. Percentage point of view, 40%. What about the calculation for this 40% ma? I received 1 lakh rupees, I paid extra 40,000. How much percentage I paid extra ma? 40%. Now, technically, it like this only, na? Interest divided by investment into 100. Interest divided by, sir, for me it is not, for DQ point of view, sir, for me it is not investment. For me what it is? For me that 1 lakh is known as capital. For Ramesh, investment. But percentage will not change. Percentage will not change. But names are different. Yes or no? No? So for Ramesh's point of view, this is called return on investment. Ramesh point of view, that is called what ma? Return on investment. But when it comes to DQ point of view ma, cost of capital. How to calculate that cost of capital ma? Interest is a word common divided with capital. Clear? Now you need to learn this point of view only. Why? Because you are taking what decision? Procurement decision, not investment decision. Why I am saying these two differences means sometimes they will give investment rupees, not capital rupees, but you have to use formula called interest divided by capital. Sir, capital is different, investment is different, na sir? Sir, terminology different, sir. Amount same only. How much he invested? 1 lakh. For capital, how much? 1 lakh. Clear? Are you okay now? Then fine. Now, company need 100 crore rupees ma. Company need 100 crore rupees. So where you procure ma? Where you are procure? In which places you are procuring that 100 crore rupees? Do you ask your family? They will give a. Yes, they will give sometimes. If they are big shots, they will give 100 crores for your business. Okay, option 1, we can procure from our family or friends. Or other options? So, maximum of the student, if they want loan, the only point strike in their mind, bank. But bank will not give this much of amount for you. Yes or no? Na? That's why, where it possible, you have to procure money. If 100 crores given by bank, no issue. Every year you have to pay bank interest. If you procure from your family members, you have to pay interest to them. Yes or no? Na? If there is only single option, no issue. But when come to the company point of view, there is a multiple options is there. More number of options is there. But they are concluded with only 5 options for cost of capital chapter. Hundreds of options is there for money procurement. Are you guys clear? But they are restricted to only 5 concepts. Either you have to procure money from selling of shares, you have to procure of money from selling of debenture, you have to procure of money from selling of preference shares, you have to mortgage your company documents in the bank, you can take loan. 4 options completed. What about the 5th option? What about the 5th option? Any guesses? If your company already have any profits, you can use for new business. That is called retained earnings. That is called what, ma? Retained earnings. Sir, it's a startup, sir. There is no retained earnings. Sir, this company already existing. Now I need to take 100 crore related decision. At that time, check your company books of accounts. If any profits is there, you can use that. I said already, if 2% of profit is created in first example, 12% profit generation, 10% cost of capital, 2% profit is there. For example, 100 crores into 2%, how much? 100 crores into 2%, 2 crores, 20 lakhs, 2 crore rupees. Now company need to take a decision at AGM or GM. The 2 crores shall we share to owners or shall I keep for the expansion? That is a decision called dividend decision. It is not mandatory to share, ma. Dividend is not mandatory, but interest is mandatory. Equity dividend is not mandatory. They will take a decision. Okay. Now they take a decision. Don't give to shareholders. Convince them. Keep that amount in our company accounts only. If it is needed, we can use that. Yes, it's a time to use. The capital name is called what, ma? Retained earnings as per accounts reserves and surplus. As per accounts reserves and surplus. But we are not using a name called reserves and surplus. We are using a name called retained earnings. So what are the 5 sources we have, ma? Selling of shares, selling of debenture, selling of preference shares, selling of mortgage of company documents, or usage of company profits. Are you okay? Okay, then fine. I call to, what's your name, ma? Madhulika, right? So I call to Madhulika. Madhulika, this is my business plan. I need 100 crore rupees of fund. If you ready to invest, please invest on my company. Now Madhulika asked, sir, I am also happy about that business idea. It will works clearly, but I have that much of fund. I have only 20 crore rupees. I have only 20 crore rupees. I will invest 20 crore rupees. Okay, then I asked, which source you want? She asked, sir, I am not a risk taker. I am not a risk taker. I am a risk taker, sir. That's why I will part of your company. I need to be a part of your company. It means I will invest on equity shares. I want your company ownership, sir. I will utilize how much? 20. I will invest how much? 20 crores. I want your company ownership. Yes, money is needed. I will agree. Okay. Now I prepared a document name called equity share. Now the terms and conditions are, so you are the owner of the company. You are capable to take a decision. You need to participate on meetings. That are the points I will note on the document. I will sell to her. Clear na? That is called what capital, ma? Equity share capital. Equity share capital. Now 20 crore rupees with help of equity share sale. The capital name is called equity share capital. Now my point, ma, Madhulika expecting something or not, ma? For investing of 20 crore rupees, she will expect something, na? What that something? Profit share. Why? Because she was a owner now. Profit share. The profit share technical term is equity dividend. Equity dividend. So Madhulika invested 20 crore rupees on my company with help of purchasing of equity shares. In Madhulika point of view. In my point of view, I procured 20 crore rupees from Madhulika with help of selling of my company share as a ownership. Sorry, my ownership as a shares. Are you okay now? Then fine. For her, expectation is what, ma? Equity dividend. Now this equity dividend denoted with KE, ma. This equity dividend denoted with KE. Now we have to figure out that KE. How much I need to pay to Madhulika? That is called cost of equity share capital. Cost of equity share capital. Now that equity dividend cost terminology is what, ma? Cost of equity share capital. It is denoted with KE. Cost of equity. Are you okay? Okay, then fine. Out of 100 crore, 20 crore rupees are procured. Next, I call to Likita, right? I call to Likita. Now I explain my business plan as well as my need. My need is 100 crore rupees. Now my need just 80 crore rupees only. Na? Now I will tell that only. So already Madhulika, your friend is there. Na? She invested on my company 20 crore rupees. Now I need another 80 crore rupees. If you are interested, you can invest. Now this Likita asking about, she also happy with the business idea. She also asking my company ownership. Sir, I will invest 20 crore rupees on your company. I want partnership or a business share. I need to sell my company shares now. Now I imposed a condition. Ma'am, it's not possible. Why? Because already my company ownership are diluted. Previously 100% ownership in my hand. Now two partners is there, me and Madhulika. 80% in my hand, 20% of share I sold her for 20 crores. Yes or no? If for 20 crores, if I sell my another 20%, my ownership will be diluted to 60%. I need to consider that too. Are you okay? I clearly explained. So this is the issue. I am not ready to dilute my ownership. But I have another option. There is another document in my company, preference share capital. Preference share capital. You can purchase that. The conditions for preference share capital, you are not a owner, but I will treat you are a owner. You are not a owner, but I will treat you are the owner of the company. You don't have any decision powers. Why? Because I am treating as a owner, you are not a owner. Are you okay? Next, we will not share our profits. First to equity shareholder. We will give preference or importance to you. If owner's profit is there, net profit is there, now owner's profit. That owner profit will not share it to my owners first. I will give importance to you. I will share to you. Then if any amount is there, I will share as a me and Madhulika. That is a benefit I will give. Now she was agree for that. What are the conditions, ma? You are not a owner. I will treat like a owner. You don't have any decision power. As well, if there is a no profits, I can't share anything. If there is a profits, I will give importance. Before sharing to owner, I will share to you. Okay, she was happy for that. And another benefit I provided, if you continue with us, at one point of time, I will convert as a owner. That is called convertible preference shares. Convertible preference shares. This kind of conditions I imposed, this kind of benefits I given in the document. She was agree. She invested 20 crore rupees. Now the 20 crore rupees is known as what, ma? Preference share capital. So Likita expecting something or not, ma? Why? Because it's not free money, generated money only, na? She will ask something. The something is known as preference dividend. Preference dividend is a benefit to Likita, cost to me. Now that is the name called cost of preference share capital. Cost of preference share capital. It denoted with KP. Denoted with KP. Next, what's your name, ma? Vaishnavi. Next call. So next I call to Vaishnavi. I explain I need a requirement of 60 crore rupees. She also agreed. I will invest. But her husband is not agreed. Yes or no, ma? There is that kind of things is there, na? So she was interested about business. She knows the growth and potential of the business, but her husband don't know about that. He was restricting. Then Vaishnavi convinced him, I'm not a risk taking. I'm not risk taking. I will invest on that company like for purchase of document name called debenture. So he asked, what are the advantages we have? If I procure debenture, irrespective of profits, company need to pay interest. I will not involve any decisions. I'm not a owner. I'm not a part of the company. I'm a just funder. If I invest 20 crore rupees at the what rate we discussed, that will came our home door at the end of the year, irrespective of the business operations. Are you clear now? That is called debentures. So what are the conditions in debenture? Conditions are not important. For understanding purpose only, I am expressing the document conditions. So as per debenture, you are not a owner. You will get interest irrespective of profits. Are you clear? We will decide now rate of interest. 12% debenture, 8% debenture, 14% debenture. You will receive that much money. Clear now? So Vaishnavi invested 20 crore rupees. The document name is called what, ma? Debenture. So what is the expectation of Vaishnavi? Automatically she will expect the 20 crores. Apart from the 20 crores, what is her expectation for every year? Interest. Now the interest is a benefit to Vaishnavi, cost to my company. Cost of debenture. It is denoted with KD. Are you okay? Up to now, 60 crores are 60 crores are procured, remaining 40 crores. Now, what are the property I have for that business? It located in the center of the Hyderabad. There is a more possibilities for getting a loan. So I will mortgage my company documents. They will give loan of 20 crore rupees. What bank will expect? Interest. Are you clear now? Next, bank loan. So tell me one bank, SBI, yeah? 20 crore. So here I am not selling any document. What I am doing here? Mortgage. When it comes to mortgage, bank will expect what, ma? Interest. That interest is a benefit to SBI, cost to my company. Now the cost name is called cost of bank loan or term loan, ma. Cost of bank loan or term loan. Two terminologies they will give in the questions. Sometime bank loan, sometime term loan. Now it is denoted with KT, small t. Cost of term loan. Cost of term loan. What about the balancing amount, ma? Profits only, na? The balancing amount is 20 crores. My company already have the 20 crore rupees of fund. I am utilized. Now tell me, whom fund it is? The 20 crore is Madhulika. This 20 crore Likita. This 20 crores Vaishnavi. This 20 crores SBI. What about remaining 20 crores? You are using from your company, na? Whom fund it is? Warner's fund. We are not sharing profit to Warner. We convinced we keep in our bank account as a company fund. But all rights in whom hand, ma? Warner's hand only. Now that for company related 20 crores also expectation is there. For whom? For Warner's. Guys, clear? Huh? Now this is called what ma? This 20 crore DQ limited related retained earnings. Retained earnings. And that retained earnings also expectation is there, na? The expectation is what? Bonus expectation is what? Equity dividend. That is called source of capital. This is called already existing capital. But both have whom rights? Bonus rights. Clear? Huh? Now here also expectation is called what ma? Equity dividend. What is the reason for equity dividend? Because the 20 crores also bonus fund only. Now that equity dividend is a benefit to owners, cost to company. Now it is denoted with the cost of retained earnings. It is denoted with now calculation of KE, calculation of KP, calculation of KD, calculation of KT, calculation of KR is the first objective of cost of capital. Only two objectives. Calculation of specific cost of capital. What is the meaning of specific ma? Individual cost of capitals. Second objective, calculation of overall cost of capital. Calculation of overall cost of capital. Clear? So exam point of view, they will ask direct question, overall cost of capital. Now that overall cost of capital also calculated in two ways ma. Book values point of view, market values point of view. So sir, what is the difference? So what is the meaning for book values? What is the meaning for market value? So do you know the concept of face value ma? In your balance sheet elements, equity share capital rupees 10, rupees 100, that kind of values you can observe in balance sheets. Yes or no na? So at the time of issue of shares, they will, what are the value they are recorded in books of accounts, that is called face value or book value. But when it comes to the market, due to different reasons, share price what happen? Either increase or a decrease. Now I sell to Madhulika 1 lakh shares. The face value is 100 rupees. Now book value is what ma? 1 lakh into 100 rupees. But due to the company potentiality, the share price is increases to 120 rupees. Now 1 lakh shares into 120 rupees. 12 lakhs. 10 lakh is known as book value. 12 lakh is known as market value. That is the difference between book values and market values. Another point ma. That book value, market value can happen only in three cases. Equity shares point of view, it will works. Book value is there, market value is there. This preference share capital point of view also, two things will be possible. Book values will be possible, market values will be possible. And this debenture point of view also, book value is possible, market value is possible. What about SBI loan ma? What about SBI loan? What is the book value? What is the market value? Why it possible in remaining three cases? Why? Because it possible number of securities. 1 lakh security, 10 lakh security, one security valuation is there. One security book value is there, market value is there. That's why one security value into number of securities, you will get a book value or market value. But when it comes to the SBI, I am not selling shares. I am not selling debentures. I am not selling preference shares. What I am doing? I am mortgaging my company document. The document don't have a book value and a market value. What are the value they given in the question paper? You can treat book value as well as market value. Hope you guys clear? Huh? When it comes to retained earnings, here also book value, market value is not possible. Why? Because they are not a securities. Profit I am using. If there is a security, there is a concept of book value, market value. For this term loan and retained earnings, there is no concept of difference of book value and market value. The both are same. But when it comes to that remaining three sources, book value possible, market value is possible. Hope you guys clear? These all points I will cover each and everything ma. It's just an overview content. At the time of calculation of KO, I will explain. Now KE means what ma? KE means what ma? Cost of equity. KP? Cost of preference shares. KD? Cost of debenture. KT? Cost of term loan or bank loan. What about KR ma? cost of retained earnings. What the name for all? No. Specific cost of capital. Yes, cost of capital only. What cost of capital? I'm saying in individual point of view, na? That's why specific or individual cost of capital. If you say total point of view, that is called cost of capital. Are you okay? Now, how you get total? Sum of all KE plus, KP plus, KD plus, KT plus, KR is known as overall or total. That is called KO. That is called KO. What are the two objectives? Calculation of specific cost of capital, calculation of overall cost of capital. Now, overall cost of capital has another name, weighted average cost of capital. Weighted average cost of capital. Now, I will give a clarity. KE 10%, KP 11%, KD 9%, KT 8%. What about KR, ma? What about KR? What about KR? 10%. Why 10%? Bonus expectation KE, ma? KR also whom fund? Bonus fund only. They are also expecting same as KE. It is not ultimate, ma. Difference is there. KE not equals to KR calculations also there. But generally, KE is nothing but KR. Reason? Both are bonus funds only. Both are bonus funds. What you said, ma? Overall cost of capital means sum of all KE plus KP plus KD plus KT plus KR. Now 10% plus 11% plus 9%, 8%, 10%. Total please. Total please. What, ma? 40. What is the meaning for 48%, ma? What is the meaning for 48%? Sir, if I procure 100 crore rupees today, at the end of the year, I need to pay 48% as a cost. Possible. It means out of 100 crore rupees, you are paying near 48 crores as a interest. Practically possible. Think logically. Now, as per your calculation, for equity shareholders 10% you have to pay, for preference shareholder 11% you have to pay, for that KD debenture holder 9% you have to pay, for bank you have to pay 8%, for retained earnings shareholders also you have to pay 10%. It means ultimately at the end of the year you have to pay 48% of capital. 48% of capital. It practically works. It means you have to create a profit of 50 crores at least. Tell me that kind of business, please. Really, I will invest. If you're generating 50% of capital as a profit for 1 year, tell me that business, I will stop my teaching. Yes or no, ma? So if you generate that much, then only you can pay 48%. Is it correct? No, it's not a correct. Why? Because this 48% we are applying on 100 crore rupees, ma? Yes or no? But this 10% is relating to 20 crore. This 11% is relating to 20 crore. This 9% is relating to 20 crore. This 8% is relating to 20 crore. This 10% is relating to 20 crore. Yes or no, na? That's why the concept came into the picture, weighted average cost of capital. Weighted average cost of capital. At the time of calculation, you will get a clarity. Okay? So KO means not simple summation of all. Are you okay? You have to consider what, ma? Weighted average cost of have multiple names, ma. Weighted average cost of capital, just cost of capital, opportunity cost overall cost of capital. So you have to understand only simple point. Overall cost of capital means what? Individual summation or not? Overall cost of capital means individual summation or not? That's the point you have to understand. So overall cost of capital means not a individual summation. It is a summation of weighted. It is a summation of weighted. Hope you guys clear? Concept 1, not concept 1. Concept A. So what is our ultimate task, ma? Calculation of what, ma? Specific cost of capital. That is nothing but KE calculation, KP calculation, KD calculation, KT calculation, KR calculation. Concept B, ma? Calculation of what, ma? Overall you can use the word called weighted average cost of capital. It will denoted with what, ma? AO. So all times they're asking that concept B in exam. If you want to answer concept B, you have to calculate concept A. Clear? Right on. Then I will start concept of KD calculation. Arrow marks also very important. First I took a loan, that's why arrow mark in my side. Next I repaid, that's why arrow mark in Ramesh side. Write in the full forms ma. ROI represent return on investment. COC represent cost of capital. So full form bank loan or term loan. Okay, Lemu. Just write down like a point. Individual summation is not equal to cost of overall cost of capital. Individual summation is not a cost of capital. I said practicality also. Are you clear? Then what is the cost of overall cost of capital? Weighted summation. Next point. Individual summation is not a overall cost of capital. But what is the overall cost of capital, ma? Weighted summation. Weighted summation. Put a star for that weighted summation. You will get a clarity at the time of KO calculations. Weighted summation is known as overall cost of capital, in brackets KO. Okay. I done these 2 points. This will helps in your final also, ma. Very, very important cost of capital. In final, you will get hardly, if you have good knowledge in FM, in final you will get 60 marks. 60. In multiple papers, SFM is there. This is advanced model SFM. And another chapter name called SPMBV. Completed? Write down the cost of capital definition, ma. Based on this example, can anyone tell me the definition? Based on this conceptual clarity, tell me anyone about the cost of capital. In Telugu also, no problem. It is a minimum rate of return company must earn to meet expectation of investors. My investors means whom? Equity shareholders, preference shareholders, debenture holders, banks. That's it. Why? Because return earnings also whom fund? Equity shareholder fund. So now read that point, you will get a clarity. Good or not? That is a right definition or not? It is a minimum rate of return company must earn to meet expectation of an investor. Correcta? Wronga? Correcta? Wronga? Don't follow blindly. Don't follow blindly. Ask yourself. It is a minimum rate of return company must earn to meet expectation of an investor. Now the last point, my point of view correct, to meet expectation of investors. Why? Because they invested, the expectation is there. As a company, I need to fulfill that expectation. That's the point. To meet expectation of investor, correct only. Do you think the word must? Do you think the word must is correct here? Do you think the word must is correct here? Yes, there is a debenture holder. You must earn profits. If you're not in, even if you're not earns, you have to pay. That's why the must also be correct. Okay. Sir, we are talking about the cost of capital, cost related things, but you said the word return. I think that is wrong. You can see minimum rate of return. But instead of that, what we have to use? It is a minimum cost of capital company must earn to meet expectation of a investor. Which one is correct? First definition. It is a minimum rate of cost company must earn to meet expectation of investor. And the second one, this one. It is a minimum rate of return company must earn to meet expectation of an investor. Which one is the right one? This one is the right one, ma. Cost we can't earn. Profits only we can earn. If you have a profits, then only you can pay cost. Yes or no, na? That's why I said this example. That's the right definition only. It is a minimum rate of return company must and should earn 10% for the meeting expectation of a 10% of overall cost of capital. For understanding purpose, I said interest rate. Now the 10% is known as what? Overall cost of capital. Link that points. First example, what I told, 10% interest I need to pay. Na? The 10% is not interest. Why? Because you procured in different sources. That's why the 10% is known as what? Overall cost of capital. Are you clear now? Now the cost of capital means what? Company must earn 10% to meet expectation of 10%. That is the expectation is nothing but investors' expectation. Who's the investors here? Equity shareholder, preference shareholder, debenture holder, bankers. Guys, clear? That is the definition part. Okay now? So let's start the concept of cost of debt here. Now this is the definition for what ma? KD, KE, KP, KR, KT. This is the definition for what? This is the definition for KO. Cost of capital, alternative name, weighted average cost of capital, overall cost of capital, opportunity cost. But I will deal with, I need to discuss about KD. Now KD has a separate definition, individual definition. This is the total definition. Now we need to learn individual definition. Can anyone tell me, based on this definition, can anyone frame the KD definition? Cost of debt definition. Cost of debenture. It is a minimum rate of return company must earn to meet expectation of debenture holder. That's it. Tell me about the KE definition. Tell me about the KE definition. It is a minimum rate of return company must earn to meet expectation of a equity shareholder. Is the wrong answer. Must is not required. If company had, they will pay. If company don't have, they can't pay. The word must also decide the definitions. Guys, clear? What about that KT definition? It is a minimum rate of return company must, bank interest, na? Must earn to meet expectation of a bankers. What about KP definition? It is a minimum rate of return company must is not right word. I said I will give prefer payment. When it is prefer, if company have a profits. It's not mandatory. Yes or no ma? That's why in preference point of view also must is not a right word. MCQ questions. Are you okay now? Concept number 1. Cost of debenture, that is nothing but KD calculation. Cost of debenture, KD calculation. Now, I hope in law you learn this concept of debenture. As per law, there is a multiple types of debenture: cumulative, non-cumulative, convertible, non-convertible, redeemable, irredeemable. Lot of definitions is there for debenture. But for cost of capital purpose, they consider two things classification. Only one point, they classified into two types. They are not consider all classification, they consider only one classification for KD calculation. Now, as per FM, financial management, that to cost of capital chapter purpose, now the debentures are classified into two types: irredeemable debenture, redeemable debenture. Irredeemable debenture, redeemable debenture. Based on name, can anyone guess the concept? What is the meaning? Not concept, meaning. What is the meaning for irredeemable? What is the meaning for redeemable? Based on name, just a guess. I will give clarity. Irredeemable, redeemable. What are the debenture document conditions? You are not a owner. You don't have any right of voting. You can't take any decisions. I will pay fixed rate of interest irrespective of profits. That's the conditions for debenture. Now, if I put irredeemable debenture in the document heading, the condition is I will not repay your capital. I will not repay your capital. Sir, what is the advantage? I will pay interest lifelong. I will pay interest lifelong. Guys, clear? So, if put in a debenture front the name called redeemable debenture, are you clear? I will enter number of years agreement. For every year I will pay interest. At the end of the year I will pay interest plus capital. That is called what, ma? Redeemable debenture. I hope you understand. Now, what is a irredeemable, ma? Debenture holder will receive only interest for perpetual life, indefinite life, infinite life. Are you clear? Now, what about the redeemable debenture, ma? Debenture holder will receive interest for n number of years. At the end of the nth year, he will receive capital also. Clear? Now, so what is the meaning of irredeemable debenture? Debenture holder will receive only interest for perpetual life. So, debenture holder will receive only interest. So, only interest means what about capital? What about capital? The common sense, no, he will not receive. That's why I'm not writing that capital related point. Ma, what is the meaning of perpetual life, ma? Going concern concept. Clear? Now, what about the redeemable debenture, ma? What about the redeemable debenture? Debenture holder will receive interest for n number of years at end of nth year. He also receive what ma? He also receive what? Capital. He also receive capital. Ma, what is the mean for n ma? What does it mean for n? It depends upon the debenture holder and company. 10 years, 5 years, 20 years, 30 years. At the time of agreement, they will negotiate each other. Are you clear now? N they will give in the question paper. If there is a no n in the question paper, irredeemable. If there is a n in the question paper, hope you guys clear how you have to judge it is a irredeemable or redeemable means first based on name. If they give directly irredeemable or redeemable, you know it is a irredeemable, calculation is different, redeemable calculation is different. If they not give name, what are the clues we have? N is a clue. If n present in the question paper, redeemable. If n is not there, that's it. Clear now? Okay. Now here you have to understand account concept. Here what are the payments as a company you are paying ma as per redeemable? As per irredeemable? As a company, what are the payments you are paying? You are paying only interest. Can I name it is called capital expenditure? Can I name it is called capital expenditure? Interest. Where you record? Balance sheet or P&L account? Interest. Where you are recording? P&L account or balance sheet? If it is a recording P&L account, that is a revenue expenditure. Guys, clear? Now you have to create a formula. I am not by heading the formula ma. I am not against to the by heading the formulas. I will give a clarity. Okay. So here you are paying only interest. It means which expenditure? Revenue expenditure. Based on that only you have to calculate KD. Clear? So interest is a what expenditure ma? Revenue expenditure. When it comes to redeemable debenture, what kind of payments company are paying ma? For every year, interest. At the end of the nth year, capital. Here, revenue expenditure is involved every year. Plus, at the time of calculation of formula, you have to consider revenue expenditure as well as capital expenditure. At the time of calculation of irredeemable, just you have to consider revenue expenditure, that is nothing but interest. Are you understand ma? Now, when it come to here, interest payment is there, that is called what ma? Revenue expenditure. And also, capital payment also is there na ma? That is called capital expenditure. That's it for today ma. Tomorrow I will explain calculation part and we will solve problems also. Are you confusing about the accounts terminology here? Are you okay with that? Why I use the revenue expenditure, revenue and capital expenditure here? Why? Because the definition says that they will pay only interest for lifelong. That's why the payment name is called revenue expenditure. It means at the time of calculation of KD, if it is irredeemable, you have to consider only interest related amount. But when it comes to you are calculating KD under redeemable debenture, you have to consider revenue expenditure called interest, capital expenditure called capital repayment. Are you okay? Okay, then fine. So revise once more. So tomorrow I will ask some questions regarding to this. Thank you.